Hi there, traders. This is Brad Gilbert with the weekly report. All right, now in this video, I just want to go through and sort of isolate potentially the best trade setups coming into the week, right? This is going to match up when you do have really good trend lines on a currency pair, whether it's on the hourlies and dailies, hopefully both. Then you can sort of correlate that with the upcoming data and see where that momentum and direction is going to come from the fundamental driver. And we can get try and isolate the best trading opportunities. Now, on your hourly charts, like I've got up here across the board, you've got, the dollar index, Swiss, yen, dollar CAD, euro, sterling, Aussie, and Kiwi. Well, there's a fair bit of noise in these hourly charts, right? So you really need to go in and isolate the best pairs. Now, for me, I haven't been getting into dollar yen, I reckon, for at least 8 months. Right. So, but looking at dollar yen now structurally, it is ready to really pop. So if we get some dollar strength, and this has to really come from the Fed meeting, right? If we get a really positive dollar tone, then check out the setup here. Like on the hourlies, it's just been slowly cruising to the top side, right? The whole safe haven trade around the yen, where people were sticking their cash in the yen just to sort of almost hide it somewhere where it won't get into too much trouble. That's why the yen's a bit of a safe haven. Then, but now we're out of that. So the safe haven trade's over. Now it becomes a real big dollar proxy. So it's moving topside on the hourlies. We've got the daily chart here. You can see it's just trying to get through there. It just needs momentum, and that it needs a big kick of dollar strength. You look at that on the weeklies and also the monthly charts. Okay, on all time frames, this thing is about to pop. So I'm thinking, you know what? If we get a really strong dollar tone from the Fed, then, this can keep going. And I'm expecting that too. The Fed have already said they're going to let interest rates go up for a long period of time, or inflation. That to me tells me they're going to let the Treasury yields continue to climb. And that's something we need to keep a close eye on, because dollar yen could be the real big gainer here. And just coming back to that, the US Treasuries, I've just charted the US 10 years. You see the yield, right? The trend in the yield going up. Okay, you can chart these like the normal instruments. On the dailies, you can see over the course of the last year or so, we are starting to really push to the top side. You come into the weekly charts, going back over the last 6 or 7 years, you can see where it is. It's mid-range, and it's got a long way to go before it hits resistance up around like just over 2.4%, right? So, and here's the long-term downtrend. Maybe this is the start of the uptrend, but it's got a bit of work to do to get above resistance. So just to give you some scope, the yields have got a lot of room to move. So when you look at dollar yen, if we get a positive comments out of the Fed, we've got entry levels here just above 109. It's well worth keeping this on your radar as you go through the week, right? There's obviously some US retail sales, industrial production, capacity utilization numbers today, but the Fed is the main game. And we're talking long-term trends here. This is where dollar yen could really shoot to the top side. Now, another one which has got a very clear trend, okay, is dollar CAD. Now, oil above $60 is a real catalyst for a weaker dollar CAD or a stronger CAD. Don't forget, we've had those really strong employment numbers last week. We do have some Canadian CPI numbers coming out, I think, Wednesday, and also Canadian retail sales figures coming out Friday. If we get really good, strong Canadian numbers to back up those employment numbers, well, dollar CAD's got a lot of room to move. Just looking on the weekly chart, right, it could easily get down well under 120, the figure, right? So this may be just the start of a much bigger move. Now, you come back to the Fed, and I was just talking about dollar yen, a real strong comments out of the Fed. Well, we see dollar strength. Well, if we get the opposite, right, we get some really poor sentiment from the Fed on the dollar, well, then dollar CAD's probably the pair to be trading, because everything's pointing to the downside. We've got a strong oil, we've got strong Canadian numbers, and the trend is down. So weak dollar sentiment following the Fed. There's just got to be a big chance to the downside. All right, so that's something to really focus on there. The rest of the pairs, in particular, if you're looking at sort of euro, and they're all pretty much the same. Sterling on the hourly, on the daily, Aussie and Kiwi, they're in uptrends, but they're sort of stalling, right? So once again, if we get a stronger dollar sentiment out of the Fed, well, you could really pick your favorites here. Okay, euro, sterling, Aussie, or Kiwi could really take a bit of a nosedive if we start to see some good sentiment there out of the Fed. They could all run to the downside. I particularly like the euro better because the fundamentals in the euro are somewhat weak, right? And we've got those, if you're having a look even today, we've got the Zeus economic sentiment numbers. If they're really weak, it builds that weaker euro perspective. All we need is a strong dollar sentiment coming from the Fed, and this thing runs to the downside. It's sort of screaming out for a belting. And you throw on top of that the suspension of the AstraZeneca vaccines across Europe. Well, I'll tell you what, that's another big negative for economic growth in Europe. Economic sentiment, business sentiment. You can imagine with that vaccine sort of rollout, bit of euphoria, they shut it down. I tell you what, we're back into the euro doldrums, and we can see euro down around 115 pretty quickly. So that's where my trading ideas are at the moment. A lot of the other pairs are just sort of tracking away mid-range with no sentiment. So get onto your bigger charts. As I said, dollar yen top side with dollar strength, dollar CAD downside with dollar weakness. They're the pick of the bunch. And then you've also got the awesome foursome euro, sterling, Aussie, and Kiwi prime for a big retracement to the downside, but we really need something big dollar-wise to get it moving. Otherwise, they could very easily steadily climb. That's pretty much it, guys. There's not much else to look at. Oil is an interesting one for those who want to keep something on the radar. I mean, this thing has been pushed up just through OPEC's reduction of supply. It's sort of sitting up here above resistance on the daily, weekly, and monthly charts, but it's not exactly going anywhere, right? Now, this thing could be well and truly running out of steam. Once again, if Europe goes into lockdown, there's going to be less demand for oil. This could be the catalyst for a decent shakedown in oil as well. If that falls, dollar CAD rally. So keep that in mind as well. Plus, the good thing about if we do see the price of oil fall, you come back to CAD, we do have very clear resistance levels here to get into a move. If oil tanked, which it's highly unlikely just at the moment, but if it did, we've got good levels to get into a dollar CAD move, and that would, that's another trade to keep in the vault there as well. All right, guys, that's a weekly report from me. There's plenty of data coming out, so make sure you are tracking the economic numbers. There's some very high impacting numbers here coming out across the board. As I said, Canadian inflation numbers. The Fed, of course, is the main event for the week, almost a month. And then you got some GDP numbers out of New Zealand, employment numbers out of Australia, the Bank of England also rolling out. Now, it's too early for the Bank of England to be doing too much. I think there was comments from the Bank of England governor even yesterday saying they have to wait and see how these vaccine rollout goes. So that could be a bit of a stumbling block. And once again, if there's a hiccup in the vaccines in the UK, it's probably the easiest trade. Get short sterling because it's gone up about 5 cents on the euphoria of the UK coming back to full economic growth. So there's plenty to play for. You just got to sort of work around and keep an eye on the things that are driving the market. Now, the Fed is the key one. So start with that and we'll see how it plays out from there. But we've got some pairs here with good setups. You just need to sort of fine tune your analysis, pinpoint them, and prepare to trade them. All right, guys, have a good one. Cheerio.